Hey everyone, this is Robert Keens with GoldSilverPros.com, and today I want to talk about the absolute bedlam, the craziness going on in the silver's futures market, and that indicates that we may be about to have an explosion in the silver price. I'm going to walk you through why I think that's the case. So we're going to look at some of the Comex reports on what's going on in the futures market. And I want to start here with something from the CME Group, which is who provides the information on the silver futures markets for the Comex. And I'm going to take you down to page 3. And at the bottom of this page is where we get into the Comex silver futures. And you can see here this absolute explosion in open interest for September and December dated contracts this year. That's just a few months away, but look at all of the open interest. Compared to open interest in other contracts, if you look at gold, if you look at copper, the numbers are a lot smaller, but in silver, they've absolutely exploded to 140,634 contracts for September alone, another 27,000 for December. Something big is going on and brewing in the silver market. When you see this much interest come into it, that's a lot of players saying, we want to take a position in the silver market. That's the first thing that you look at to see what may happen in the spot price of a commodity in the next few months, is how much open interest there is. But we want to dive a little bit further down into this. And I want to take you to another report. This is the year-to-date delivery notice for the Comex. Now, the delivery notice for the Comex is those longs in a commodity, in this case silver, who want to take physical possession of the silver. They don't want to settle for cash. They don't want to roll their contract to a future month. They want to demand delivery. So this is the Comex 5,000 ounce silver futures contract. And you can see it starts here December last year all the way through July. So we have a good 6-7 month view of the market. And you can see there's a moderate amount, a few thousand contracts for silver, dips down to about 932 here a couple months ago. And now we've had this explosion in July of 13,903 contracts. Now note that each contract controls 5,000 silver ounces, as we can see here. So we're going to multiply this to see how much people are standing for delivery. So we have 5,000 per contract, and we have 13,903 contracts. So we're going to multiply times 13,903. And that's the equivalent of 69 million ounces of silver stood for delivery on the July contract. 69 million ounces. That is an absolutely astounding number. I have not seen anything like this in silver since I've been studying it for the last 10 years. This is an explosion of demand for physical silver on the Comex. And the question is, are they going to be able to provide that silver? So one of the things I wanted to look at was the metal depository statistics for silver on the Comex. And there's a little bit of explanation needed for this report because there are a couple of different types of silver actually stored at the Comex. We see under Brinks here, and this would be true for every major depositor on the Comex, there's a registered and there's an eligible. Eligible is basically silver that is stored on the Comex, but it's not registered for delivery against a contract. So it's basically warehouse storage. And those inventories cannot be used as collateral for a futures contract or for delivery for a futures contract. The registered ones can. So this line here, if you look at it, it tells you how many ounces each company has that are actually registered again for delivery against a futures contract. So Brinks has 21,964,863 ounces. But the interesting thing here to note, we're going to take a look at JP Morgan. The reason we take a look at JP Morgan is JP Morgan has these massive short silver futures positions on the market and has had them for forever, for over 10 years, since the last financial crisis. And at one point they had 160 million actual physical ounces available on the Comex, and almost all of it was under eligible. None of it was under registered. So they were not planning on actually having to deliver silver against their short futures positions. None of the longs were demanding that they deliver, but they have in the last week or so moved 39 million ounces from eligible to registered, meaning this registered number here is what they expect to deliver against a coming futures contract that a number of longs are standing for delivery. This is a massive amount of ounces of silver that JP Morgan may be giving up for the longs on the other side of their short contracts. And if you look, this is just a daily number. So this is daily for July 13th, yesterday's data. And you can see just in one day, there was an increase of 1,150,720 ounces of silver in one day from eligible to registered. So every single day, there's an increasing amount of silver going into the registered category. What does that mean? Well, we saw the explosion in open interest. That's people coming into the silver futures market, taking a position whether long or short. And now we've started to see an explosion in the number of those long contracts standing for delivery, 13,903 contracts, which amounts to 69,515,000 ounces of silver. And we start to see every single day a lot of these companies that have short positions moving to the registered category to satisfy delivery. JP Morgan, of course, being the biggest in the last week, moving 30-something million ounces from eligible to registered. So we think that people are going to make JP Morgan deliver physical silver on the Comex futures like they have never delivered silver on the Comex before, again, against a long position. Somebody's taken opposite their shorts. This is a sea change in the futures market. It means people are actually standing for delivery, and we could see a silver price explosion at this point. JP Morgan only has about another 121 million ounces. If this were to happen over and over every month on futures contracts, and we could see that it might, based upon the open interest. If the open interest stays here and longs continue to stand for delivery at this pace, it would drain JP Morgan of their Comex inventories within just a few months. Now, some people say that JP Morgan has a lot more silver stored outside the Comex than they could bring to bear. But nonetheless, when you're transferring 30 million ounces in a month for delivery on a contract because of exploding interest in people standing for delivery, you're not going to be able to survive very long before you deplete your silver inventories. And what that means is JP Morgan's going to have to reverse all their shorts. When you see all of this massive short position in the futures start to reverse to the long side, you're going to see that spot price come up a lot. So we could be looking at $25 silver in 2020 easily, maybe even higher than that. We may revisit $35 silver that we had in 2011. That would not surprise me at all. And for you guys that follow the silver mining stocks, that would be, you would see an absolute explosion in the silver mining stock sector. That's a very small sector of silver miners, primary silver miners that you can invest in. And if you're going to see higher silver spot prices there, the profits of those silver miners are going to go through the roof. Even some of the silver exploration companies that have deposits in the ground, that have their technical reports, you're going to see an explosion in price. So look out, silver mining stock investors. You guys may be about to make a lot of money if what we think is about to happen in the silver price is going to happen, because finally the longs are standing for delivery and say, give me the physical metal. We're going to keep track of this, and we're going to bring you updates on this. Look forward to an article coming out from me for 4 silver mining companies that you may want to take a look at in your portfolio based upon what we think is going to be an exploding silver price. Till next time, this is Rob with goldsilverpros.com.